Obviously, the chairman and I both have strong passions about the challenges that we face as a country. The one thing that I do believe that we agree on is the importance of having a strong capital markets as it relates to making sure that Americans have the ability to continue to grow their businesses and to solve their challenges. And frankly, I hope that we get there. Building on the same comment that the chairman had around capital standards is where I'm going to go with my thoughts today. When I think back on these last few years, it's hard not to recognize the extraordinary efforts our financial institutions of all sizes, frankly, undertook to administer a program like the PPP, all while weathering a shutdown of our global economy. I welcome your thoughts, but from my viewpoint, our banking system was resilient. Our financial institutions stepped up and delivered aid to support families and businesses every single day. That's why Vice Chair Barr's broad comments around holistic review of our capital trouble me so much. We should be laser focused on our economy and addressing the needs of everyday Americans trying to forge a new future and helping them open the door to opportunity. As you and I both know, capital and its quality must be continually scrutinized, but increased capital does not necessarily provide an increased benefit, and requiring banks to hold capital that is not risk-based and appropriately tailored to a bank's size, scope, and activities can cause more harm than good. At a time of record inflation, where everyday needs are more expensive, we should not be pursuing actions that are harmful. Rather, we should be supporting the engine of our economy, small businesses. While I remain greatly concerned by the Vice Chair's comments, I am hopeful that you will ensure this review is appropriate, keeping the impacts on our banking system front and center. We must promote and further the growth of our economy and thereby our people. Anything less should be unacceptable. To that end, will you commit that any ongoing capital review by the Federal Reserve will follow the law and that any follow-on regulatory proposals will be risk-based and tailored to an institution's activity, size, and complexity, and not a one-size-fits-all?
Yes, I can easily commit to that. You know, we're very strongly committed to tailoring, and that'll be, I can say that anything we do will reflect tailoring, which is a long-held principle for us and also now a requirement in the law.
Yes, sir. Thank you very much. 2 weeks ago, I sent a letter with Chairman McHenry to Chair Gensler regarding the SEC's climate disclosure rule, urging him to rescind his proposal and reminding him that the SEC is a market regulator, not a climate forecaster. Much like Congress designed the SEC to protect investors, to maintain fair, orderly, and efficient markets, and to facilitate capital formation, and not to advance progressive climate change policies, Congress designed the Federal Reserve to promote price stability and maximum employment, not to play politics. To that end, I find worrying the Fed's announcement of recent actions to consider climate-related scenarios, coupled with remarks by the Vice Chair of Supervision, as attempts to incorporate broader ESG policies into the financial services system. Banks have and continue to account for weather-related risks in their risk management, but efforts that attempt to predict climate change far into the future fall outside the scope of their authority. Importantly, the level of speculation required in these models should highlight their arbitrary and capricious nature. At a time when our economy is suffering from historically high inflation, I expect our central bank to focus its time and resources on bringing inflation down, not on policy outside of its mandate. I noted in my opening statement a recent speech that you've given about the state of the Fed and how you should resist the temptation to broaden its scope and to address social issues. Do you agree that the Federal Reserve does not have the authority or statutory direction to use its monetary policy or supervisory tools to wade into the ESG or other climate policies?
I do. As you know, there's a tightly focused role that we do have that I believe that we have, but I would agree with your statement.
Yeah. Mr. Chairman, I have 20 seconds left, but I'm going to defer because of my earlier question to my opening statement.